This year has been rather mixed for most altcoins. Some altcoins are down, others are up. SPX6900 appreciated by almost 10,000%. Now it's easy to talk about an asset after it has appreciated. But did your favorite YouTube channel actually talk about SPX6900 when it was still cheap? Because over here on this channel we discuss SPX6900 regularly. And the first video was published 300 days ago. And that was when the price was still at 11 cents. Now we are above $2. I tried to cover altcoins early on this channel, so feel free to subscribe over here in case you haven't bought SPX6900 when it was still just in the cents range. Now, the fundamental idea when buying an altcoin is always, do we get outperformance versus the benchmark? So if we buy a rather risky altcoin where we have more volatility, where the price is going up and down massively, do we actually, in the end, do better compared to just buying Bitcoin and Ethereum and Solana? The answer is not always straightforward. What we've got over here is the SPX6900 chart relative to Ethereum. Long term, of course, we do have our nice outperformance, but it does come under a lot of volatility. From top to bottom, we have seen crashes of more than 70%. That was at the beginning of this year. Fundamentally, it's always a game of risk versus reward. Do we still have enough potential upside when buying something like SPX6900 after it has already risen that much this year? As a useful benchmark for the potential upside, we can look at market caps. Now, SPX6900 has a market cap of 1.9 billion. And what we're seeing on the screen here are the largest meme coins across all chains. Number one is Dogecoin with 35 billion. Number 2 is Shiba Inu and number 3 is Pepe. Now all of those tokens are mainly on the Ethereum chain. Afterwards comes Bonk, Pudgy Penguins and Trump. Those are Solana tokens. And SPX6900 started off with Ethereum and then migrated over to other chains as well. Now it would be extremely surprising to see SPX6900 suddenly flip Dogecoin. It's probably also not going to flip Shiba Inu anytime soon. So the upside, relatively speaking, right, to other larger meme coins is maybe another 2, 3, potentially 4x, but after that the air is clearly getting very thin. Now the price development is always depending on demand versus supply. Now the supply is static for SPX6900, there is no token inflation. The demand comes mainly from two sources. We've got the on-chain demand, that's on those three chains, so Ethereum, the base chain and Solana, and we've got the demand through the perpetual futures. So that's the levered bets on the price, and then there are arbitrage bots that balance out the perp market with the spot market. Let's have a look at the on-chain data. What we see over here is the number of retail investors versus whale investors over time. It's a chart combination I like to look at regularly on this channel for pretty much any chain that I analyze over here. And what we see on the left is the number of holders or the number of wallets that have at least 500 SPX tokens. So at the current price, that's roughly $1,000. In the middle, it's 5,000 tokens or $10,000. On the right, there's another 10x, so that's now 50,000 tokens or $100,000. That's the numbers on the Ethereum chain. Here are the same numbers on the base chain. Note how they tend to be smaller, so this scale tops out at 3,000. For Ethereum, it was at 15,000, and for the whales, it's even clearer. There's more than 1,000 whales on Ethereum, but there's only 70 whales on the base chain. Here are the same numbers on the Solana chain. Solana is relevant, so over here we've got 12,000 wallets. It's still less than on Ethereum, but it's definitely relevant. But for the whale investors, we've only got roughly 300. Again, much less than what we have on Ethereum. What's noteworthy is how the accumulation has pretty much stopped since February of this year, and how some whales are even selling. And that seems to be an effect that's visible across all chains. There's no more buying happening. At least the number of holders on chain isn't growing. Yet the long-term chart of SPX6900 relative to Ethereum is going up, at least in the last 4 to 5 months. Right? We have seen this outperformance versus Ethereum of almost 300%. And so that then begs the question, right? How can a price appreciate by that much, getting into the top meme coins across the entire space, yet the number of holders isn't going up? I think the answer is short-term speculative money entering the space. It's bets on the price with leverage. Have a look at the trading volume. So on the spot market in the last last 24 hours, we saw roughly $30 million moving hands on Gate.io. So that's the spot market. But on the perpetual futures market, we saw much more. Over here was 83 million worth of trading volume in the last 24 hours. Most perpetual futures traders right now bet on rising prices of SPX6900. Here's the open interest on the asset over time. So how many bets are currently being made on SPX6900? It's now close to 200 million. And just have a look at how much the price itself correlates with that open interest. So as there's more short-term leverage and the capital enters the perp market, the spot price tends to follow as well. And again, we are now at historical heights. There's a lot of leverage in the asset. Also, the trading volume is close to all-time highs, and the trading volume on the perp market is also correlated with the spot market. So what does this mean? It looks like the current appreciation of SPX6900 is not organic. It's the market makers that buy up the price. It's potentially market manipulation. It's short-term capital entering. Now, why do I say that perpetual futures funding that bets on the price is short-term and that it will go down over time? It's because the financing costs of perpetual futures tend to be pretty high. So holding a position long-term is very expensive. Getting in and out of a position regularly is very cheap on the perpetual futures. So if you're trading actively, using perpetual futures is very effective. If you're just buying and holding, it's very expensive. And so when the demand does not come from the spot market, when on the spot market across all chains, we rather see the line going flat, potentially going down. But at the same time, we see all of that leverage getting into the market with the current rally. I don't think that's too healthy of a development, especially given that the market cap of SPX6900 is already at 1.8 billion. And yes, it could potentially double. In the best case, maybe triple, but that's, in my opinion, the absolute best case, a 2 to 3x from here. And then the question is it worth the risk, right? Because we have already seen in the past how SPX6900 underperformed Ethereum by more than 70%. And that crash, by the way, also happened while open interest delevered. Now, I'm currently betting on neither direction of SPX6900. I'm not buying it. I'm not betting on rising prices. I'm also not betting on falling prices. But I do believe that currently the asset is definitely overhyped. What I'm waiting for is either an extreme move to the upside where there's no more room to grow, where we can then bet on falling prices, a market cap of maybe 3 to 4 billion, or alternatively, simply a pause in the extension of the leverage. So if we don't see leverage growing anymore, then I do think people will take profit, and then we will see the turnaround. And then at the beginning of the turnaround, it might make sense to bet on falling prices. Right now, speculating against the general trend is probably a bit too dangerous, because as the saying goes, the market can stay liquid, then you can stay solvent. So it's better to bet on the current momentum. If the current momentum is still bullish, it's probably not so good, even though prices are high, to already start shorting, to already start betting on falling prices. It's better to wait until things have already turned around somewhat, because that's how meme coins always move. They go up very, very quickly and then they deflate over time. And we've got sufficient time to bet on falling prices when the current momentum turns around. So this is Bonk as an example. It topped out at 4 billion market cap. Here we've got Fartcoin. It topped out at around 2 billion market cap. Here we've got Floki Ino, which topped out at around 3 billion market cap. And so that's my strategy with SPX6900 as well. I'm not betting on falling prices as we still climb. But once we turn around, we have plenty of time to take advantage of a potential deleveraging. Because again, people aren't buying SPX6900 long-term anymore on the spot market. People are just adding short-term leverage via the perpetual futures. I'm not getting tired to mention this. This is the performance of the smaller altcoins in the last year. Pretty much everything went down, while Bitcoin performed very well. Here, just as a reminder, right? Bitcoin in the last year doubled in price. How many of the smaller and more risky altcoins were able to compensate that risk, to actually outperform Bitcoin? This is 100 tokens here on the screen. We've got this outperformer over here. We've got this outperformer over here. All the rest underperformed Bitcoin in the last year. This is 100 assets, so 98 out of 100 assets did worse than Bitcoin. Now there are two potential ways to deal with this. We could either just become Bitcoin maximalists. We just buy Bitcoin, maybe Ethereum and Solana, that's about it, and we forget about all of those other altcoins. But there's also a second way, and that is to take advantage of this mispricing. In the last 3.5 years, the market cap of the altcoins underperformed Bitcoin by 77%. And the reality is even worse than what this chart here implies, because again, this is a comparison of market caps. The Bitcoin market cap versus the market cap of the altcoins. But when we invest into an altcoin, we don't get the performance of the market cap. We get the performance of the price, and there can be a big difference. Usually there is a big difference. This is WorldCoin. This is the market cap of WorldCoin over time. And this is actually not that far away from the all-time high. But compare this to the price development of WorldCoin during the same time. This is very far away from the all-time high. And this is in the end what the retail investor is getting. Why is there this discrepancy? It's because of the tokenomics, right? It's more and more tokens that hit the market. It's the insiders that are cashing out. It's the early investors, the VCs that are cashing out. It's the team that's cashing out. So the teams get more and more tokens allocated towards their wallet, right? They get vesting unlocks, and then those unlocks get sold. So this is the WorldCoin supply over time, right? It moved from 500 million to currently 3.6 billion, more than a 7x in supply. That's what's causing this massive difference. That's why investing in the smaller altcoins is such a bad idea long term. That's why 98% of the altcoins did worse than Bitcoin in the last year. And this is a structural problem of the altcoin market, right? Everybody can launch an altcoin. Everybody can set up any kind of vesting unlock. The supply can grow however it wants. There's no laws around this. There's no regulation around this. And so of course, the average retail investor gets milked over time. The altcoin market needs at least around 500 million, potentially more than that, maybe 600 million in US dollar inflows every single week in order to keep the prices just stable, right? This is the unlocks across the tracked tokens on this website. Without the demand coming into the altcoin market at that rate, we continue to see this kind of development because again, there's just constant sell pressure happening. And so let's say our thesis is that this structure will not change, right? That the VCs will continue to dump on the retail investor, that the insiders will continue to cash out, that most small altcoins will continue to do worse than Bitcoin, Ethereum, and Solana. We could just stay away from the altcoin market as a whole, or we could try to make money from that. And that's what I'm personally doing. I try to take advantage of this opportunity. I'm trading in this way already for more than 4 years. And what we're seeing over here in black, that's my performance that I made compared to if I had just dollar cost averaged into Bitcoin. So dollar cost averaging is in light gray, and the black line, that's what I made. And this is just monthly data out of my personal Excel sheet. It's close to 4 years of data now. So the TLDR is that I bet on relative valuations. So I bet on Bitcoin, Ethereum, Solana going up, and I bet on all of those crappy small altcoins to go down, relatively speaking. I do 2 positions at the same time. Long, one thing, short, one thing. So in the end, the position is delta neutral. It's not impacted by the overall market that much. I used to do this with borrowing and lending platforms like Aave and Venus Finance. Now, recently, in the last 2.5 months, I moved this to perpetual futures. And that experiment is going very well. So here's the development over time. I started with 40K in balance and that moved to 60K. So 50% of return in roughly 2.5 months. And there wasn't too much volatility along the way while making those gains. I am sharing my own trades as well. So that example of WorldCoin, right? I actually made money from that. So I posted how I was betting on falling prices of WorldCoin, how the tokenomics of WorldCoin aren't that great, and doing a relative valuation bet might make a lot of sense. And so that was when the price was over here, and of course the rest is history. WorldCoin relative to Ethereum went down by 40%. And if you then have smart leverage, right? Leverage that is limited in risk because of the use of stop losses, etc., we can make a lot of gains. So this is then when the community copy traded that particular position. Yeah, I always like these kinds of comments, right? Premium has already paid for itself, etc. But the community does not just copy trade me, right? There's all kinds of opportunities, and those opportunities are shared in the different chats as well. And so there are two ways to go about this, right? Either you just learn it yourself, you do the active trading, you figure out what kind of altcoins are incredibly inflationary in nature, which kind of altcoins tend to go down versus Bitcoin the fastest, then exchange the ideas with the community and open up the positions yourself. So that's the best approach if you don't yet have that much capital, but you do have some time. So there are two essential videos for that. There is this one here, using perpetual futures on Hyperliquid to bet on relative valuations. And there's this video over here, risk management with relative valuation bets on Hyperliquid. So there is two tutorial videos among a database of all kinds of exclusive content. And so that's the do-it-yourself approach, right? That's currently $125 per month. And if you don't like premium, just message me within the first week and I'll refund you 100%, no questions asked. But if you're among the people that have a lot of capital, but not that much more time, that maybe have to focus on a high-paying job or on a business, and simply just want to allocate towards that strategy, then you can also just automatically copy trade me. This is still somewhat experimental, right? We just started this 2.5 months ago, but that's reserved to the people that subscribe to the annual membership, where, by the way, you also get savings of $250 per year. You can start out with monthly and then upgrade to yearly later, or if you don't want to learn from the very beginning, just start out with yearly, that's fine too. You will get all the instructions on how to deposit to the capital pool, and then all the trades that I make will automatically reflect towards your capital base as well. Of course, I don't have the guarantee that we continue to make money, but in general, I do believe that the odds are on our side. Again, we make money when the altcoins continue to do worse than Bitcoin and Ethereum and Solana. And I do believe that's a structural problem with the market. There's constant sell pressure across the board, and some assets are worse than others. And that's where the real outperformance is, right? It's not in the common strategies trying to find the next 100x altcoin, right? This is how everybody gets burned. This is how everybody loses their funds. Please don't make that mistake. Please do something different to the masses, right? If you do the same things as the masses do, then you get the same return as everybody else. And again, returns are very much concentrated towards just a few players in the market. The vast majority of people loses, especially trying to find the next 10 or 100x meme coin. A link to premium should pop up directly over here on the screen. Just click on that. It will lead you directly to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.